Hello and welcome to the Business Standard Banking Show. The net financial saving of household sector dropped to 5.1% of GDP in FY23, which is the lowest in 50 years. Latest data released by the Reserve Bank of India showed household savings are important for the investments in the economy. Soumya Kanti Ghosh, Group Chief Economic Advisor of State Bank of India, came out with a paper after RBI released the data, arguing that financial savings should not be seen in isolation, but in context to overall savings that include physical savings. We have Mr. Ghosh with us today to discuss some of these issues related to household savings. Mr. Ghosh, welcome to the show.
Thank you.
There is a dip in the net financial savings as a percentage of GDP, while financial liabilities jumped to 8.2 trillion rupees since the pandemic. Do you think the households are borrowing more for consumption needs?
Yeah, I think, Manojit, that's a very pertinent question. But just let me give you some context of the data because which will make understand the followers a little bit. If you look the data from FY20 till FY23, the total financial liabilities, I think, increased by around 8.2 trillion, and the total assets of the households increased by 6.7 trillion. So that means there was a decline in net financial savings by around 1.5 trillion. And the question is that the increase in the net financial liabilities of the household, does it portend anything? There is both two parts to it. The first is yes and no. The first thing is that yes, there has been a decline, increase in the liabilities of the households. But on the other side, the total household savings is always physical savings plus financial savings. If you remember, during the early days of the FY12 and 13, the household physical savings were around 65 to 75% of the overall household savings, and financial savings were around 30%. These numbers actually had increased significantly with financialization of the economy, formalization of the economy, financialization of the savings. And at some point of time, this number had increased significantly in FY 19-20. But what has happened in the last 3 years since pandemic is that there was a perceptible decline in interest rates. So what it has done is that it has allowed the households to rejig their portfolio in favor of the physical savings also. The share of the physical savings, which was at 48% in FY21 out of overall household savings, is supposed to increase to around 65 to 70% in FY23. So that means there has been a significant rejig in the household savings. So this is point number one. The second point is that even if there has been a decline in there has been an increase in the household indebtedness, but the point is that whether household savings as overall has declined or not. If you look into the data, we'll actually find that the household savings has increased in FY22. It is also going to increase in FY23, even after such a decline in the financial liabilities. So what is clearly apparent is that a shift has been going on from financial savings to physical savings, because as all of you know, the real estate sector has been seeing some sort of a turnaround. There has been an increase in the property prices also, if you look at the RBI price index. So all of this and the low interest regime may have perhaps incentivized the household to move a part into the physical savings. And I think at the end of the day, this is not a bad thing, because if the household sector does well in terms of the overall savings mobilization on the overall front, I think at the end of the day, that is good for the economy in terms of financing of the deficits which we have.
While home loans and vehicle loans are rising, but so is credit card spending. Essentially, when we say that there is a decline in household savings, it means that there could be some stress. Don't you think that the sharp rise in credit card spending is some sign of stress that households are borrowing more for consumption needs?
See, I'll give you one important data. If you look into the overall gross bank credit, and if you look at, I'm not looking at the NBFC sector because NBFC loans are typically more of housing loans and auto loans. But if you look into the overall overall bank credit, and if you look at the retail portfolio, yes, credit card receivables are a part of it. Personal loans also are a part of it, but personal loans mostly go to the salaried segment. But I'm keeping that aside. Even if we take the argument that credit card receivables has gone up, but if you look into the housing loans, if you look into the auto loans, if you look into the loans basically which are going for the purchase of assets, I think that number is close to 60% in the overall credit expansion of the retail, which has taken place in the last 3 years. So I think from that point of view, yes, there has been an increase in the household loans, but a large part of that is actually going and financing physical assets. And the second point is that the overall housing indebtedness in the Indian context is still significantly on the lower side. We have a household indebtedness, which is, I think, around 36.5% of GDP, which is perhaps the only country which is lower than that is Russia. But if I take out Russia because of reasons, all other countries, including China, has a household debt to GDP ratio, which is higher than that. And in Indian context, most of this debt is secured debt. So because it is backed by adequate mortgages or adequate collaterals. So from that, even the gold loans which the people take, that are also collateralized for in the term of the gold jewelry. So I think while there, of course, there has been increase in the spending of receivables, but I think that is not so large in the current context so as to create a matter of concern for the households.
The other point is inflation. Now, since the pandemic, inflation has stayed on the higher side. RBI has been fighting to keep inflation under control. What kind of impact the higher inflation may have on the financial savings?
Yes, so that's again is a very interesting point, Manojit. I think the increase in inflation can actually has an asymmetric impact. When the inflation increases, people could actually see that since their financial savings are getting eroded, so it is better to invest in those assets where we are seeing an appreciation. So, and the first thing comes to the mind for a household is why not invest in the real estate sector, because that actually could give me some amount of increase in my value of the portfolio in this time. So while inflation may result in some sort of an erosion in the net value of the total liabilities, but it also increases the overall household physical assets, because the household could actually see that as an opportunity to invest in something which they may not have done earlier because of whatever reasons.
You have talked about the benign interest rates as a reason for shift to physical assets, the household. Is there any other reason which you think which has changed this behavioral pattern of the consumer from shifting from financial assets to physical assets?
Yes, I think one of the reasons, apart from the interest rate, is that if you remember during the pandemic, there was the government and the regulators have actually taken a lot of steps to unclog the real estate sector. You know, there was a lot of projects which were stuck. There has been the government had created some funds whereby which has been used to help these projects get to the final lap of completion. And as of today, because of all such efforts, what has happened is that the overall projects which are basically were in non-completion stage has significantly gone down, and the inventory has gone down. Also, the fact is that two aspects of the housing market have prospered. One was the affordable housing market, the other was the upper end home loan market. While the upper end home loan market has continued to expand significantly even today at the middle income, there has been some sort of a slowdown in the affordable home loan segment because of the increase in interest rates. But on the whole, I think the housing loan market and the real estate market, and also because of the government's significant push on the capital expenditure, this housing loan market has managed to stage and recovery. And if you look at the RBI housing price index, you will see for the last couple of quarters, the sequential increase in the prices has been on the higher side. So that may be also giving an indication to the households that the cycle of an increase in prices in the real estate sector maybe just have set in, and so therefore why not shift some part of our savings into these physical assets.
And finally, if I can ask, what are the policy implications for this shift to physical assets, particularly for banks which really look at financial assets?
During the pandemic also, you must remember that the household financial savings had got at bump up because of reasons, because of a significant accumulation of bank deposits, because people are unable to spend. So that was expected. So therefore, the decline in the financial savings is also mean reverting right now, but the decline has been a little bit larger because of the shift in the physical assets to the physical assets. Also because of the fact that there has been an increase in prices, the household investment in gems and jewelry, the valuables has also remained static. So my point is that yes, there are opportunities for the household to invest in assets which they are not hitherto invested. And also remember that as per the NSO definition, the household sector actually is a large sector which also includes the small and medium enterprises investment in machinery and equipment. So if I look from all those aspects, I think this move into some sort of physical assets by the households and also by the SME sector, the unincorporated enterprises and all those things, I think that's a good sign for an investment revival in the economy, which could help the growth over a medium term.
It will help revive investments in the economy, the result of the shift in to physical savings. That's a very valid point. Mr. Ghosh, as always, it was a pleasure talking to you. Thank you for speaking to Business Standard.
Thank you. Thank you so much.
Thank you, sir. It will help revive investments in the economy, the result of the shift in to physical savings. That's a very valid point. Mr. Ghosh, as always, it was a pleasure talking to you. Thank you for speaking to Business Standard.
Thank you. Thank you so much.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.